Hey everyone, welcome in to another daily editorial. Here on the KE Report, we're talking copper and potential opportunities now that we have seen the copper price roll over ever since that peak in mid-May. And the copper stocks, even the majors, have turned around most, or at least some, down 20 to 30% since those peaks in May, even at the beginning of this year. We're chatting with Matt Badiali, editor of the New Energy Investor, published under the Mangrove Investor, which we will link to in the show notes. Matt, as I just said there, look, copper has pulled back right around $4 a pound, trying to find a bottom right in this price, but still well off of those highs from mid-May, something we've talked about over the last couple of months. And the majors, as well as the juniors, but the juniors didn't really do much. The majors have also rolled over. The big question being, Matt, is this an opportunity or is this the end of that pretty good copper market run, especially for the majors ever since that low in 2016?
Yeah, I mean, that's the question everybody wants to know the answer to. And the math still is unchanged in my mind. I mean, the plan is still electrification. We're still producing and buying lots and lots of EVs. We still want these big AI data centers. So the demand math for copper is what it is. The supply math it hasn't really changed, although I think actually it's getting a little worse because we were a little optimistic in how much supply we could actually bring on. You're seeing mergers and acquisitions. BHP and Lundin just bought Filo. They have a big copper project that needs to be built. So in my mind, this is an opportunity. No bull market goes straight up, and you have these pullbacks. You're going to get opportunities where, I think in this case, everyone's looking at China and wondering if Chinese demand will ever recover. I mean, anyone who's been in the metal spaces knows that these things are cyclical. If you're in commodities at all, energy, metals, grains, prices go up and they come down, and they go up and they come down. And what you need to do is understand the long-term supply and demand math. And in the case of copper, we have way too much demand, not enough supply. Price is going to go up in the long term. So when the share price of giant producers goes down, it's an opportunity.
Well, Matt, just to that point, I guess for people listening in, you can think back years ago, people have been pounding the table on the supply demand fundamentals for copper, and they've only improved year after year. There's more and more demand coming in because we weren't talking AI data centers or crypto mining. We were talking EVs and the energy transition, but now there's even more stacking on the demand side. But the supply is getting pushed further and further out as more and more mines actually don't come to fruition. Do you think more companies need to do what BHP and Lundin Mining are doing with Filo and combine forces to get some of these projects built, because they are capital intensive, they are huge, and they're often so visible that they get a lot of social pushback? Is it something where we need to see more partnership amongst the major miners to make some of these things happen?
Yeah, I do. I think that's something that has been very prevalent in the oil and gas sector that needs to be done more in the mining sector. And really, it comes down to the capex is just doing nothing but getting bigger and bigger. The risks are going up. Like you said, you have an additional social risk. In this day and age, anyone with a cell phone it has the potential to derail a project that's not done right. So you need to have lots of eyeballs on it, and you need to spread out the capital risk among multiple partners so that you can get these things built. And the returns will be good, but you have to spread the risk out now.
Absolutely. With these high build costs, it's something that we've even seen in other resource sectors too, is majors need to get on board to spread out their risk and share some of the costs. On the government front, though, Matt, can governments do anything outside of simply easing permitting, maybe shoring up some sort of price stability for copper or any underlying metals when you're talking about these expensive long builds that could encourage building and lower cost of capital?
I wish. The government always seems to do the wrong thing when they try and get involved with markets. So they're not making permitting easier. In fact, they're making it more difficult. Typically, what happens in governments is when the price of the metal goes up, they slap a windfall profit tax on things. So instead of helping with capital constraints and helping the market stabilize, they do the opposite and actually make it more volatile. I think when it comes to these global metals markets, even if you could just get the government to be stable, right? What we see is that the government changes its mind way too frequently compared to the lifespan of these mines. You can have multiple administrations, and each administration comes in, they have a different priority when it comes to mining. And so the mining investors are the ones who get hammered by it. And the other thing that they're doing right now with copper is they're incentivizing demand and disincentivizing exploration and development by making it more difficult to acquire ground, to make it more difficult to actually go out and explore or develop a mine when you find one. And so they're exacerbating this math problem that we were just talking about, the supply demand. You have government pushing down on the demand side and not letting the supply rise to meet it. So
Well, Matt, when you think about this from the investable angle, and to your point, when we see a pullback like we've seen since May in the copper price, but also in the producers, then all the way down the food chain to the developers and to the juniors, with everything under pressure and with people so bulled up on copper for the longer term narrative, what would you say to investors listening in that are very much flavor of the month investors? They get distracted easily. Maybe share the knowledge you have on the copper industry of where this thing is going and why pullbacks like this are actually big opportunities, not to be snoozing on and waiting around for, but actually to be capitalizing on.
yeah, it's difficult. It's difficult to talk about kind of long-term investing to a meme stock generation where people measure returns by looking at a chart, putting their finger at the bottom, and then putting their finger at the peak and go, man, I should have made 3,000% on this. But when you've been doing this for a long time, that's really hard to do. And so recognizing the uptrends and riding them, right? So the the nice thing about copper is that there will be long periods where we don't need to do anything. What we have right now is an opportunity to do something, which is to buy in, right? So you can acquire some of these majors, some of these mid tiers that have gotten beaten down by what appear to me to be short-term economic headwinds, like fears of the Chinese economy. We can buy some of these majors like Southern Copper or Lundin Mining, and then not do anything for a couple years. That's the benefit of understanding these trends and knowing the supply and demand equation, understanding what's coming. If you had if you were looking through these sort of lenses at oil and gas when it went negative or was down around $20 a barrel, if you could get past the idea that we would never drive again, there were so many opportunities to buy these companies and just sit back and make money, right? That's the goal. Like, I don't want to be a day trader. I want to buy something cheap that has the potential to grow. The ideal company to me in this space is to buy the mining companies that own the world-class mines. The ones that have been mining, they're just the biggest contributors to the copper supply today. Buy those companies that own them when they're cheap and not touch them until the copper price, comes back to $4 or $3 or whatever. That's my plan. I want to hold these things for many years and not mess with them.
So, Matt, I want to ask you, when you're getting the data on, let's say, supply, demand, anything that's critical to understanding where the copper market might be going, where do you get it from? Simply because, look, there's a lot of different reports that point out a lot of different factors. We were told copper was going to run out by the end of the year from one larger financial institution earlier this year. So where do you get your information from?
I get my information from a lot of different places, but if you've ever read The Big Short or saw the movie, The Big Short movie, they wanted to get information on the housing market. And so they went to look at these big the developments, and talked to the people who lived in these developments, and they saw places where there were all these brand new homes that were dead empty, or they had renters in them. They talked to people who had multiple homes. They had put mortgages in the names of their dog, that sort of thing. I use a combination of kind of the macro reporting, because as you said, when you read Goldman and you read S&P Global, you get a widely different forecast. But I also look at the cars I see on the road. If you're interested in EVs, look around. Uh, is there an EV in your driveway? Is there an EV in your neighbor's driveway? I mean, I'm starting to see these Tesla Cybertrucks around now. And first of all, I can't believe anyone would buy one of those. I can't believe anyone would buy one of those. If you disagree with me, send Corey an email. But I can't believe we see them. I see all sorts. I see the Rivian trucks now. Never seen them before. That's another electric vehicle. We have lots and lots and lots and lots of Teslas. So that is a very simple metric of copper demand, right? Because for every one of those vehicles that you see, you need all that extra infrastructure. It's all copper demand. And if you're seeing it around your home, I guarantee you that you're going to see it everywhere you go. When I come to Vancouver, and this started happening a couple of years ago, this is really one of the things that turned me on to what was happening with copper. I used to stay at the Fairmont all the time, and one year I showed up at the Fairmont a couple of years ago, and they had electric vehicle chargers at the hotel. And then they put electric vehicle chargers at my local library. And I thought, wow, that's really odd. And then I started digging into it. So that sort of anecdotal evidence often points me in those directions. My wife decided she wanted to have a battery operated lawnmower. So we went out, and sure enough, there were battery operated lawnmowers being sold at Lowe's and Home Depot. That's demand, right? This is what I like to do. I like to kind of suss out these little threads and kind of put little pieces together in my head and come up with investment strategies. I think from a resource investment side, you have to be able to do that. You have to be able to take the anecdotal evidence, you have to understand cycles, and you have to be able to parse through the big thinkers at Goldman and some of the big banks. Now, all that said, I also have some people that I rely on, and Daniel Yergin at S&P Global is a personal hero of mine. I followed him for many years when he was writing about the petroleum industry. He's the authority on the history of petroleum. And when he became the chairman for S&P Global, and he came out and basically said, look, everything about copper that I can see now, everything about it reminds me of the setup for petroleum back in the 40s, 30s, and 40s. So that was another indicator. And then this is an authority that I would look to. So that's how I gather my information. But it really does start with things that I can see around me. What are they selling at Home Depot? Like, if they weren't selling electric chainsaws and electric lawnmowers and electric drills at Home Depot, I would have been a little more skeptical. But man, I mean, even the Barbies come with electric batteries these days. It's crazy.
Well, man, I don't think there's any doubt that there is a huge demand growing for copper. And I think most people get that. I think most people understand that the supply is crimped. I think the question people have is how to play it. And you brought up that you could invest in the producers, or you could pick an ETF like COPX, COPX, which is like the GDX of the copper producers. That's a way to play it. What do you think about, instead of taking individual company risk, because some of the copper projects can have one problem and that whole project's dead, what about playing it through royalty companies? There's about 4 or 5 royalty companies that now have a peppering of really good, long-dated, quality copper assets. Some have paying copper assets right now. Some gold royalty companies have actually shifted over to being 25 to 40% copper now. What about playing copper that way?
Yeah, I think that's a great way to do it. I mean, I've always liked royalty companies, and years ago there was a royalty company that focused on base metals. And I'm sure that one of your listeners will know the name of this company. I believe Royal Gold bought them. But the thing about them was they always traded at a discount to the precious metals royalty companies. But yeah, I mean, I love cash flowing royalty companies. But for playing copper, there's a benefit there because royalties tend to trade based on their free cash flow. The ones that have the ones that I'm interested in that have cash flowing royalties, um, the ones that have the long dated, the copper mine hasn't built yet. I mean, you still have risks associated with it. I mean, they've put the money up, so they've married that project. I like COPEX for people who just want to dip a toe into this space. A good ETF, a good basket of stocks is the way to go because it reduces your company risk. And if it's a copper focused ETF like COPEX, it's going to respond to moves in the metal because it's going to anticipate the increased revenue of the companies in the basket. And so I like that. I do think that there's a place for royalty companies. I kind of like the ones that have cash flowing royalties. And I think Royal Gold, I could be wrong, but I think Royal Gold gets a chunk of its royalties from copper, but I could be wrong. But I also, you can play copper on Newmont makes a lot of its money out of producing copper. So there are ways to do it other than just buying a straight, like a major mining company. But if I were going to talk to, like, if my dad wanted to dip his toe in copper and he said, look, I'm really interested in this, I would put him right into COPEX, and that would be that.
What about some of these new Sprott ETFs for copper, like COPP, the copper miners, the larger copper miners, or COPJ, the copper juniors? These are much smaller ETFs with total assets, just a lot smaller. Do you see any potential in these to grow?
Oh yeah, absolutely. But you have to be tolerant of whipsaws because, the junior copper space is a yeehaw. It's jagged ups and downs. And honestly, I'm not sure. I'd have to go back and look and see because I don't know that basket very well. But I have to tell you that I'm very jaded when it comes to kind of the smaller copper companies. I spent a lot of time reviewing kind of that lower end of the copper mid tier, the guys that aren't in production but are developing, and I put air quotes around developing an asset, particularly if it's a Canadian company, Canadian asset. A lot of these guys it's like 0.3 or 0.4% copper equivalent, which means it has really low copper and maybe some sort of gold credit in there. And they're not economic at today's prices. And they're a hope and a prayer for $7 a pound. That's not, in my mind, a copper development company. And so I have a list of these companies. But for me, so if you're going to do that and you're going to go look for something like that, avoid companies that have 400 million plus shares out and that the grade of their deposit is 0.4% copper equivalent or even 0.5% copper equivalent. They're just not economic. And it's going to take a much, much higher copper price to get them economic. I'd much rather have a company that has an asset like Filo. Filo was that was a great play. And I think we even talked about them, Shad. Did we in January or February? You remember when the ETF, that silver ETF, dumped all those stocks and Filo got absolutely blasted? You had this great opportunity to buy a really high quality copper development project at a 30 or 40% discount simply because an ETF dumped it.
Yeah, it also helps that big backers, right? These copper plays, to your point about share structure, it's also what kind of shareholders are in these plays because it costs a lot of money to build out a resource and to move copper assets through the pipeline. And we all have seen just how important it is to have big money backers. Matt, always great chatting with you. Again, Matt is the editor of the New Energy Investor, published under the Mangrove Investor website, which will be linked to in the show notes. Matt, always fun chatting with you. And hey, sounds like there's a great opportunity in copper. So everyone listening, let us know which copper stocks or ETFs you like.